Alright, so this is Robinhood. Their ticker symbol is HOOD, also known as Hood. The stock is sitting roughly $98 as of right now. The company is worth about 89 billion, and it is trading around 48 times the price to earning ratio. And most people probably know Robinhood as a quote unquote free trading platform that blew up during the meme phase back in COVID. Roughly, most of it was back in 2021 during COVID with AMC, GameStop, Nokia, quote unquote, and BlackBerry and so on. So that's what most people know about Robinhood. Either they're free or the meme stock phase. So the story now is actually quite different. So the stock and the company become very profitable. The company is pushing into crypto, which they already have done it. Prediction markets, they also have done that as well. And quote unquote tokenized stocks as well. Most famously for SpaceX, which they just got off not too long ago because it just went public about a week and a half ago. I think it's roughly around that time. Today I'm going to break down how they make money, the latest numbers that they have, the real risk of Robinhood, and whether the price of right now really makes sense. So the latest news. Okay, first the headline. So Robinhood closed in 2025 with record numbers. So they had 4.5 billion in revenue and then 1.9 billion in profit. Then the first quarter of 2026 they did miss the expectation on both. The stock dipped. The bigger story is that the new bets. So Robinhood is going hard into prediction markets through a deal with Kalshi and a new exchange joint venture. So in Europe, it now sells quote unquote tokenized US stocks, even access to private names like OpenAI. And in late June, there's an analyst started coverage with a buy rating for Robinhood to be roughly $125 for the price target. All right, so for the business model, so how does Robinhood actually make money? So there's actually three buckets for this. So about half is just the transaction revenue. So it's just like the fees from routing and transaction fee of crypto, options, and also stock trades. And that is the biggest piece and the most volatile of it. About a third is net interest, so money earned from customers' cash, also margin loans and lending, what Robinhood is really known for with the Wall Street Bets, which grows with both assets and interest rate. The last slice is the other revenue. So mostly the $5 a month gold subscription that they have in Robinhood, which is like the slickiest. The mode is like 25 million customers and is known for like young investors, which they really like that subscription feature. Again, it's only $5 a month. They is somewhat of a good perk if it financially makes sense. One of them is mostly known for the interest rate they can earn for like the high yield savings. So that's actually a plus. But it depends. There's obviously better ones out there, but if they want to stay on Robinhood, it's pretty good to be honest. For only $5 a month. All right, so the numbers. So now the numbers they are striking. Revenue went from 1.9 billion in 2023 to 3 billion in 2024, and last year 4.5 billion in 2025. So the profit hit a record of 1.9 billion with earning per share of $2.05. They have 27 million funded customers, and the average revenue per user keeps climbing and climbing. And just one honest note, the first quarter of 2026, they did miss the estimates on both the revenue and the earnings. The growth, it is real, but it does not move in a straight line. The market reacts hard when it actually stalls. For Robinhood. So what about cash flow? So on cash, Robinhood is a machine right now. Net margin was about 42% back in 2025, and the business is in the capital light. So the profit turns into a cash fleet. The platform asset hit 324 billion. So they were up like 68%. Here's the tension though. Their earnings are clinical. Half of its revenue rides on the trading volume and also quote unquote crypto, which to swing the markets, and a big piece of the profit is actually the interest income that shrinks when the Fed cuts rates. So that's actually also pretty volatile too. The hot market, the money printer, cold market, which really slows down how Robinhood operates. So the engines do slow down quickly when that happens. As for capital allocation, what they do with all that money that they have. So as of right now, Robinhood doesn't provide dividend because again, it is a growth company. It could be a good or bad thing depending on what investor you are. And there is an active multi-billion dollar buybacks for Robinhood, but the real spending is on products and acquisitions that they're making, from buying crypto exchanges, example Bitstamp, to building out prediction market infrastructure. The bet is clear. Management would rather plow cash into becoming a full financial platform than hand it back to shareholders. If the new products scale and that really pays off, if they still stall, investors start asking for the cash. As for the macro and geopolitics sides of it, there's actually not much of geopolitics sides of it. But if you zoom out real quick, the tailwind is a young generation entering the market, into the stock market, plus the crypto and the prediction market really gave a boom to Robinhood that's leaning harder than anybody. The risks are the risks are quite real too. So a big chunk of the profit is the interest income. So if the Fed cut rates, it does hurt them directly. Crypto and prediction markets is an order flow all set under regulators who can rewrite the rules if they want. And a quote unquote a zero fee trading platform is now standard. So it competes with like Schwab, Fidelity, Coinbase, and every fintech company that's out there. Say quote unquote because they actually do still get cut because all the volume that they make, that they do make money, but they like to market themselves actually like a free platform. But to be honest, back then they were actually like when you want to trade the stocks. I know options that you have to pay, but even for like stocks itself, back then there was like fees, but right now there isn't really any fees. They're very it's less in a sense, those type of things. Like barely anything, but those volumes do add up. So but they still mark it as free, but even though it isn't, if you take a look into it, but just that's just an FYI, that's all. So for the competitive position, so where does it stand against rivals such as Schwab, Fidelity, who are much bigger, much more established, and safer, but slower in the aim at older money? Robinhood owns the young and mobile first user. Everything is on the phone, but their web application is not too bad, but they're mostly known for like on iOS or Androids and such. So on the crypto itself, their current competitor right now is mostly with Coinbase and everyday money such as like Cash App and others. Its edge is speed and design, plus a willingness to launch things like prediction markets against like Kalshi and Polymarket and tokenized stocks years before the big players. The real mode is that all-in-one app. Once your crypto, stocks, and cash all in one place, basically all in one, you tend to stay. And also, they also have the credit card that they're having, but that one is not fully roll out. Again, those are waitlist purposes. So I didn't really mention that in any of these slides, but they also have a credit card too, but it's not fully for everybody yet. It's still on the wait list, but things might change in the coming months or years whenever Robinhood make those changes. So the risk. So there's actually four risks to keep in mind about. So the biggest risk is that the revenue cyclical. Half of it really leans on trading volume, crypto. So if there's a downturn, like that really hits fast and really hard. The second is the variation. So the stock is nearly all-time high at very rich multiple, And the first quarter show how quickly a miss gets punished for their price. Third, they are very sensitive to federal rates. So since the interest rate falls every time the Fed rate cuts, and the fourth, regulations, because crypto and prediction markets and the order flow are sitting in the under a microscope by the government right now. So for the bull, neutral, and bear cases, so what has to be true for each path? So for the bull case, the new products, the prediction market, and the tokenization scale into real revenue. Their gold membership keeps growing, and Robinhood compounds into a full platform of high margins. For the neutral case, the growth keeps going but stays, somewhat lumpy, and the stock chops sideways while it slowly earns its valuation over time. Lastly, for the bear case, a market or the crypto downturn creators, trading volume, which also means trading revenue, rate cuts hit the interest rate income that they have, and their rich multiple will unwind quite fast. So Robinhood spent years living down as a quote unquote meme stock reputation. It has quietly become a real and very profitable platform that catches that a lot of the money still rides on crypto and trading volume. So the whole question is whether these new products can make that revenue more steadier for them. So that's really pretty much for Robinhood and that I made a research about. So that's really pretty much it. So I have Robinhood right now. So I think later on I'm gonna make a video about Coinbase too because they're somewhat in part their business model and such. So something to look out for. All right, thanks.